Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about First American Financial Corp. Quarterly Report. First American Financial Corporation offers a wide range of financial services through its subsidiaries. The company's main segments include title insurance and services and home warranty. The title insurance and services segment provides various products and services such as title insurance policies for residential and commercial properties, closing and escrow services, risk mitigation solutions for real estate transactions, appraisal and valuation-related services, lien release and document custodial services, document generation services, warehouse lending services, banking, trust and wealth management services. The home warranty segment offers home warranty products that cover residential systems and appliances against failures due to normal usage. In total, First American Financial Corporation provides the following list of businesses and services. 1. Title insurance policies. 2. Closing and escrow services. 3. Risk mitigation solutions. 4. Appraisal and valuation-related services. 5. Lien release and document custodial services. 6. Document generation services. 7. Warehouse lending services. 8. Banking services. 9. Trust services. 10. Wealth management services. 11. Home warranty products. The company operates in various states, the District of Columbia, and internationally through a network of direct operations and agents. The First American Financial Corp stock price has remained relatively stable over the past year, with no significant changes, exceeding 3.92% on the day of or immediately following various announcements and reports. Despite reporting strong earnings in both the second and third quarters of 2025, surpassing analyst expectations for adjusted EPS and revenue, the company's stock price saw only minor fluctuations. The elevation of Mark E. Seaton to CEO and several corporate recognitions, including being named one of the best workplaces and receiving awards from Fortune and People, also failed to cause significant stock price movements. Routine dividend declarations and a 1.85% increase in quarterly cash dividends further contributed to the stability of the company's stock price. Overall, these events suggest that First American Financial Corp has maintained a consistent performance over the past year, with no major catalysts for significant stock price changes. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in direct premiums and escrow fees, agent premiums, information and other revenues, net investment income, and agents' retained title premiums. The title insurance and services segment also experienced significant growth, with a 29.5% increase in direct premiums and escrow fees from domestic commercial transactions, and a 28.1% increase in direct premiums and escrow fees from residential refinance transactions. In addition to these factors, the company's trust assets administered by FA Trust increased by $600 million, and like-kind exchange funds administered by the company grew by $100 million. Escrow deposits also saw a significant increase of $2.7 billion. On the other hand, revenue decline is primarily driven by net investment gains/losses, which decreased by 92%. Net realized losses on sales of debt securities and amortization of net actuarial loss also contributed to the decline in revenues. The real estate and mortgage markets, interest rates, affordability, supply, and mortgage financing availability are also significant drivers of revenue growth or decline. Increasing interest rates and reduced affordability, supply, and mortgage financing availability can decrease revenues, while declining interest rates and increased affordability, supply, and mortgage financing availability can increase revenues. Net income and profit margins. A significant shift. The financial performance of a company has undergone a significant transformation between 2024 and 2025. Net income has experienced a substantial increase from $59.7 million to $411.8 million, marking a growth of $352.1 million for the year. This surge is also evident in the quarterly results, with net income rising by $293.6 million for the 3 months ended September 30, 2025. The profit margins have also seen a notable improvement. The net income margin has increased from -7.3% to 9.6%, indicating a significant turnaround in profitability. Additionally, the net investment income margin has risen from 10.3% to 11.2%. These changes suggest that the company's financial performance has improved significantly, driven by various factors such as operational efficiency, revenue growth, and strategic investments. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, it reported $581.5 million in operating cash provided by activities, while in 2024, this figure stood at $572.9 million. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, which is a positive indicator for its financial health and stability. The company's debt level and interest expenses have undergone significant changes in recent periods. Debt levels have increased significantly from $9,981.60 to $12,284.80 between December 31, 2024 and September 30, 2025. However, there is a discrepancy in the reported figures, with one source indicating an increase and another showing no change. Despite this inconsistency, it is clear that debt levels have increased. Interest expenses have also seen significant changes. While they decreased by $2.4 million, 3.4%, for the 9 months ended September 30, 2025, they increased significantly in other periods. For instance, interest expenses rose by $2.7 million, 21.6%, and $8.2 million, 21.9%, for the 3 and 9 months ended September 30, 2025, respectively. Overall, it appears that the company's debt level has increased, which is likely contributing to higher interest expenses in some periods. The company's financial performance reveals a mixed picture across its segments and regions. On the positive side, title insurance and services showed strong results with a pre-tax margin of 12.9% and segment income before taxes of $236.2 million. Home warranty also performed well with a pre-tax margin of 14.1% and segment income before taxes of $16.2 million. However, some segments struggled to meet expectations. Title insurance and services suffered a significant loss of $130.3 million in the same period. The corporate segment also underperformed, with losses ranging from $5.4 million to $100 million. These results indicate that while certain areas of the business are thriving, others require attention and improvement. Management's outlook on company strategy. The company anticipates a potential impact on its deferred tax liability due to tax reform provisions. However, management is confident that the company's resources are sufficient to meet operational cash requirements for at least the next 12 months. The majority of the business relies on cyclical and seasonal real estate and mortgage markets. Management plans to continue paying quarterly dividends at or above current levels and will reassess its capital allocation strategy, including decisions on dividends, stock repurchases, and investments. However, they are concerned about potentially disruptive innovation in the industry and market conditions, such as high interest rates and limited credit availability. The company's financial condition may be affected by goodwill and intangible asset impairments and investment portfolio risks. Additionally, the ability to fulfill parent company obligations and pay dividends may be limited due to subsidiaries' performance. The company has demonstrated a commitment to returning value to its shareholders through 2 key initiatives. Firstly, it has paid dividends, providing a direct return on investment to its stakeholders. Secondly, the company has also engaged in share buybacks, repurchasing and retiring shares of common stock to increase shareholder value. That concludes the financial summary for First American Financial Corp. Feel free to comment below, and I will be happy to answer them when possible.